Hey, welcome to the Daily Stock Review. Today I'm going to go over and update my screener that I'm using to find hidden gems in the stock market from all over the world. Now, the goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing those 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. This is my investing process. So today we're going to focus a little bit more on where to look. And so I've updated my screen just in reflection of going over the last 70 stocks over the last month. And then we'll have probably a little quick peek into some of the 5-minute checks. But overall, we'll just have a look at the process. These are the guys I learn off and what I base my investing system and process off. They did pretty well for themselves over, just a little while. By following the breadcrumbs they've left behind, we should be able to follow in their footsteps. Now, I've consolidated everything I've learned from those guys into helpful frameworks that help me, and they're free, as well as valuation calculators and things like that. So if you want those, it's free. It's my gift to you guys. It's a link in the description. Now let's get into it. So I like to use the free access stuff so you guys can follow along at home without having to go and pay for anything or anything like that. Now, what I'm looking at here is you guys can just type this in FinViz or any other screeners that you guys like to use. And over the last pretty much month, I've gone over 70 stocks and just having a quick glance at what are some of the big characteristics that pop out, as well as putting together a few things that I've picked up myself. So what I do want to do is I want to look at small caps. Now this screen has pretty much anything around, lower than 2 billion is pretty good for small caps. But I want to have a look up to 10 billion because this kind of gives us an area where there might be a little bit more developed businesses that still have a really long runway ahead of them. So that's why I've altered that for the time being. So it should give us a little bit more range of stocks to have a look at. Now, I've updated the fundamentals section of it. So sales growth over the past 5 years, I still want to look for ones that have grown by at least 30%. Now, if this screen had, a screen that looked at sales growth past 5 years and it had an average, over that time, I'd be trying to look for something that had at least around 10% growth on average. So 10% per year as opposed to 30% over a 5-year period. But it's what we've got to work with on this free tool. The other one that I really found really helpful after screening through those stocks, the ones that had a net profit margin, so at least over 10%. Now what this unfortunately does is it screens only on the current year. So after we get new annual reports come out and they report on their net profit margin, there might have been businesses that had one-offs, expenses that came out and hit them that year, but are still great businesses to own, and they're just being affected by non-cash charges. So that's something that I need to be wary of while I'm looking around, and just remember that I will need to obviously keep screening every year. Now another one is return on invested capital. So the money that the business keeps within the business, we want to see that it's actually using it effectively. So if the business retains anything and it's investing that money back into itself, we want to see that it's using it effectively. Businesses that don't and either have a negative return on assets, return on equity, or return on invested capital usually is just wasting money that's invested back into the business. And it's really a good sign of if this business has good internal growth opportunities and things like that, and even like acquisitions and things, then it's able to convert future cash into growing the business. So that's a really good one. And yet again, that's over 10%, and it only looks at the current year. So like I said, with the net margin over time, if that changes, that means that, some businesses might have had a rough year and have dropped off this list, and we'll need to keep looking into the future or broaden our search. And so we can look by different metrics. Now, one that we have done, after putting all that in, and this FinViz pretty much only looks at some exchanges. So we've got NYSE, NASDAQ, a couple other little ones from there, but really the main ones are in the US market. So from that, we get 66 stocks, and this is our, I guess, starting screen. Now, also what I learned going through that quickly was really we're looking for another part in my process is consistency. So trying to think about the long-term play on these businesses, we want to see if it's being consistent so far. And so one of the good little spots is we don't really care about the price of the stock. That's a secondary outcome. We want to see things like this. We want to see sales increasing steadily. We don't really want to see shares outstanding increasing. If anything, we'd want to see them kind of decreasing, which means there's a share buyback. And gap earnings per share. So if the share count remained this constant, earnings is our net income per share pretty much. Now, there's a fair few things that can fudge this number because in effect, earnings is what the majority of investors look at. And so we want to be wary of that. But this just gives us a nice trend. And so you can see this business has some nice sales growth and it's pretty consistent across the years. So that would be something to look into. Now let's just have a quick look through a couple of these ones. We did come across Compugen, which we'd had a look at previously. And it did come up on one of our other screens. And the reasons for that were that, it had net income that had turned profitable this year. It's had some ups and downs, but we can see that it's had a pretty big last year, like change in revenue, and it's been able to put some of that on the bottom line. So this was a stock to keep an eye on and do a little bit more of a deep dive to see if this revenue was going to be consistent going forward. And is that going to continue to grow, or is it maxed out and that's all we've got? Just having a quick look, I can see that we've got Duolingo. So a pretty recognizable brand in the language space. And so just looking at the amount of variance from the, just looking at the stock price across a 12-month period, it's altered quite a bit from a high of 350 down to, what are we talking, $95. And we can see that sales has been pretty consistent and growing over that time. And same with earnings per share. So net income has gone from negative up to positive and is producing some nice cash. Now, PE ratio at the moment, 16. It does indicate that even with this growth, that current investors are kind of thinking, it looks like you guys might not have the best growth prospects going forward. So savvy investors like us are going to look into this one in the coming weeks to see if this is actually worth it and if the growth prospects are different to what other investors are expecting of the stock. Now, what else was interesting? Obviously got some insurance companies and things like this. So Kinsale. And now another couple of investors have covered Kinsale and talk very fondly of them. And so you can see just on our trends what we're kind of looking for. This business is consistently increasing revenue year on year. It's consistently increasing the net income year on year. And the outstanding shares has pretty much stayed pretty much the same And depending on what we got here, it might be predicting that they might have actually planning to buy some of the shares and start decreasing them. So in a share buyout campaign. So this would be a nice compounding business to own. But we'll do our homework and make sure of it. We do have a pretty low PE ratio. So it makes it an interesting opportunity. And you can see just how much this stock varies in a 12-month period. So information might change on the stock, but if we look at these numbers and we go back years and look at the share price compared to these, you can see that the engine behind the business is still running, but investor sentiment changes a huge amount. So this is kind of the screen that I'm going to be using over the next couple of weeks. It does look like it's brought in a lot more higher quality businesses to have a look at. Some of them are going to be garbage and will not be worth my time at all, nor yours. And so, for instance, we did go through Nutex. It's varied quite a bit. Got a quite speculative at the moment. And if we look at this, we can kind of see why. So we've got die. You won't let me kill it. Damn it. So we've got our sales. Revenue is obviously increasing. It's been a little bit unsteady, but it's made a fair whack. But our net income is all over the shop, and our shares outstanding. So they've been issuing more and more shares to try and keep the business afloat, to keep that cash flow coming in. So that's what we kind of found last time we looked at it, and that was out with our 5-minute check. Now, looking at these, I think using this screen and what we've got here is going to be a little bit quicker. So I can just really use that filter of consistency, which is extremely important, especially if you want to buy a business that you want to hold for the long term, which is what we want to do. We want to find great businesses that are going to have the potential to go from 10x to 100 over an extended time period. And by looking for businesses that are already consistent and proving themselves year on year that they can increase their net income, increase their revenues, reach broader markets, that's what we want to do. All right. Then it can also help us if we did want to look at some larger businesses as well. So if we go and type this kind of stuff in, we will find some excellent larger businesses. The growth prospects may not be as considerable. Like over the long term, they might be quite mature companies. So for instance, let's look at the megas. So what comes up? Well, we've got Palantir, Nvidia, and Arista Networks. Heavy insider selling triggers profit taking, 5% drop. So, looking around at these kind of businesses and like with these screens, just these fundamentals of return on invested capital and things like that, and net income increases and revenue increase, we can kind of find some really nice businesses and fertile grounds really to go and have a look at further. So I'll be using my screens to go a little bit deeper on these ones. And I've found that I'm probably not going to need to go through 1,000 stocks in 12 months. And I'm going to need to spend a lot more time doing deep dives. And so that'll pretty much be the transition to go for this part of the channel. To continue to hunt for the next Amazon, the next Nvidia, the next Monster Energy, things like that, using a little bit more higher quality, looking for more proven businesses in terms of consistency. So not necessarily the general trend that we can see. So it might come up with some quite speculative stocks in this list, but if they're starting to prove themselves, they're going to get a good look at. And I think that's the way I'm going to have to go to be providing enough value to you guys as well. Because otherwise, reviewing 1,000 stocks and coming up with one golden nugget in at 12 months, man, I'd be just getting really shitty at these fucking videos. So I think going deep on a few of these really good stocks is going to be a lot more interesting for you guys, a lot more valuable for your own investing as well. And yeah, let me know in the comments what you guys are thinking. If you do want those free tools and things like that, feel free to grab them. Like I said, it's my gift to you guys, so that we don't all need to start from scratch. And pretty much this is the screen, basically, that I'll be using to find hidden gems in the stock market. And so after I've exhausted this list from the US markets, I'll be finding another screen and looking at alternate markets as well. So the ASX here in Australia, there'll probably be less opportunities, and Euronext, other places like that, the London Exchange, the Toronto Stock Exchange, and some other ones around the world as well. So if you guys are excited and keen to see that journey and to start earmarking some stocks for your watch list, feel free to subscribe so you don't miss out along the way. And if you've got any other thoughts for me, feel free to drop them below. We're all learning on this journey. I've got the skills that I'm developing to go out and review the rest of these in my deep dives, which you'll see. And over time, we'll refine that process and you guys will get to see that journey as well. All right. And otherwise, have a fantastic day. And otherwise, you can check out these playlists, which I think you'll like, or this YouTube video that YouTube thinks you'll like. Cheers.